go. Okay, welcome in, you trader nerds. How are you? It is the 10th day of May in the year of our Lord 2023. And here we are, and stuff is just stuff, and VIX is still going down, and I don't know what all. So, just a good old thing. The market was up pretty big earlier, and now it's just kind of flat. And let's look at our big green monster. Big Green Monster says we are fairly priced. We are at the point of control. Nothing to see here. Nothing to see here. If I had to guess, I feel we'll probably fill some of these little pockets, probably to the downside, but we could easily fill this one to the upside. So I just see us kind of being flat for the next couple of days. Nothing to see. So let's see how we're doing, y'all. You want to? So here we go. We are at 37,235. 37,235. 37,235. Oh, yeah. 37,235, baby. Ring up the band, Roger. Yes, hallelujah. So let's see how our little account is looking. And where is my little account? Oh, here we go. So we are at 2137. 2137. 2137. Come on, be there. Oh, darn, we're blue, y'all. 37. This was 17 yesterday. And I think our buying power was like 72 something. 78.32. 78.32. 78.32. All right, let's say for something we can manage, right, and get us a little more theta. So we're at 0.10. I wouldn't mind adding $1 or so to make that green, though, because that's a rounding issue. So let's go see what we got as far as our positions. And we've got some 9-day stuff. We got some 37-day stuff. 34.50s, 33.90s. I don't know. It's hard to tell with these. I need to do a better job of keeping up with stuff. So why don't we just put on a new trade? You want to? So let's go here and let's sell us some premium. So let's go closest to 60 days. And we'll do let's go a long put vertical. Might as well do one of those too, right? So, and let's move it down. I fell into a burning ring of fire. There we go. Don't get hung. Where are we at? We're hung. 30. All right, we want this to be $10. 40, 40, 30, 80, 90. It's 925. Go there. Go there. 975. That's good. So we'll do this one. And then I've kind of liked selling the 9 deltas. Let's do 2 of the 9 deltas. Where are we? 9 delta. 9% probability of being in the money. So we could do these 34.90s. Wait a minute. That's not right. 9 delta.
That's probability of touch you're looking at.
Oh, I was looking at the wrong thing. Oh, yeah, absolutely. Why do I have probability of touch in there anyway? I don't normally have that in there. All right, so we want a 9 delta. There we go. Probability of being in the money. There we go. I started to say the premium didn't look good. Okay, let's do this one. 9% probability of being in the money. 3,700. We'll do 2 of these. Let's try to be greedy. Let's get 1,650 out of it. Come on, baby. Fill me. Yeah. Now we're rocking that theta at 44. Let's see what that looks like. 44. Oh, yeah, I added $7 of theta. Oh, how sweet it is. How sweet it is. Almost makes me want to close one of those, though. But I don't think so. I think I'm good. I think I'm good. All right, so we are green, 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 and green. So that looks good. Let's close it up. Let's go to the other accounts. See if we print money over here. Let's go to the... I'm looking forward to seeing everybody in Atlanta tomorrow that's coming. Oh, what a great, great time. I'm picking up Ed and tray at the airport. I got to still clean my car out because it's got chicken nugget stuff in there. But I'm sitting there going, I don't think I'm going to dust it out. I mean, everybody knows I live on the farm. It's dusty. I got 5 kids. It's dirt. I mean, I'm not going to clean it too much. It's just this what it is, you know. And if Ed thinks he's too good to ride in my little 2011 Nissan Rogue, well, then just screw Ed. By the way, Ed, I hear, is bringing his silky breeches to work out in, his silky shorty shorts. So can't wait to see that. All right, how are we doing? We are at 85, 169. 85, 169. 85. Oh, yeah, look at this, y'all. 85, 169. We are playing the band. Hallelujah. Moving on up, baby. That's what we do. So we are at 86 minus 20 is 6682. 6682. Look at that. 6682. Uh-oh. Rut row, Shaggy. Same problem we got over here, right? 17% there. And buying power is at 24,880. All right, let's see if we got anything we can manage over here. We got 9 days, we got 21 days, 37 days is the, so I don't really need to manage anything. I need to put on a trade. So let's do the same strikes that we did over there. And we did let's see, we did the 54,000. 54,000. Uh-huh. $54,000. Now, I'm still not opposed to doing Victor's 300 watts. I mean, I think I'm going to just flip between them, do 50s, 300 points. So we'll go to 51 days. What was it? 39,54,000. 39.50. 59.50. We're selling that one, right? So we already got one there. That's fine. So we'll sell that one, and we'll buy the 4,000 for. That doesn't seem right. I know what I did over here. 4,000, 54,000. Sorry, 4,000, 54,000. 4,050. 4,000. 4,000. There, 975. We'll make that up to 10. Make sure I don't have any positions there. 4,000. Yeah, see, that's the problem. I'll be selling there, and 4,050. I don't want to sell where I'm long one. So I think what I'll do is I'll go 4,010. We'll sell the 4,010, and we'll buy the 4,000. Well, I can't do that one either. Dad nabbit. Dad nabbit. All right, so we'll do the 4,070. 4,070, 4,020 for 1050. Let's see if we can get filled for that. 4,070, 4,020. Come on, fill me, baby. 1075. Paying a little bit more than that, but that's fine. We're getting a little richer premium out of the other one. So here we go. That will go 4,070, 4020. Okay. So 4,070, 4020 for what was it? 1075. Let's see. We got in there for 1075. 1075. Okay. Let's put that in there. MES. We did a 1-cone tractor, and we'll call this. Well, normally I put my nakeds first. I don't guess it matters. PDS 53. Well, that's fine. I'll let that one go with the 6 that we did the other day. That's fine. Puts. And then naked, or no, debit spread, 51 days, 5, 10, 23. So then we'll do our nakeds. 2 of these. We'll call this NP54. Puts naked 51. 10, 23. And we'll put this one in. Let's see where we're going to sell it at. Trade 51 days, and we want to go to the 9% probability being in the money. So around in this 37, let's do the 37.20s. Two of them, 37.20. Yeah, 37.20, 17.25, 37.20, 17.25, 17.25. What was it? The 37.20? Beautiful. Beautiful. Beautiful, beautiful, beautiful. We got our little trades in. Let's go put them in little groups. Come here, little fellers. Let's put you in your little groupies. Everybody likes to have a little group to belong to, even though we trader nerds like being a part of a group. That's why our group is so successful. Move to groups. We'll put debit spreads. And these are our nakeds. Yeah. So we actually did a great job in moving our theta up to 87.04. See what that looks like. So we went from 82 to 87 and got it green, baby. Look at there. Beautiful. Yes, that's how you do it. All right, let's close that one. Ed wants me to clean the dust out. Unbelievable. Okay, Ed. I'll have to go to the Dollar General and get some wipes. And unbelievable. I mean, the stuff, geez. It's just such a pain in the arse sometimes. That Ed. All right, let's go to our let's say Crimson. See how we're doing over here. Come on, let's play the Jeffersons one more time, shall we? 35, 6, 11. 35, 6, 11. Oh, yeah. 35, 6, 11. We are playing the Jeffersons. All right, and our Grayson ratios were 30 minus 7. What's that? 23, 38. 23, 38. 23, 38. Oh boy, I don't have to do anything here. 17. So buying power usage is, we are at 9,080. 9,080. Okay, so we're at 25%, 0.11. Everything looks good. Let's see if we need to manage any trades. So we've got debit spreads. Our first naked comes in at, we're at 37 days remaining. Let's just see what that looks like. I really don't think I need to do anything in this account. It's really good. We got our T-bills in yesterday. So let's look at our nakeds. Got something at 51%. Now, you could take that off and roll it back out to 60, but I don't think there's a need that we need to do that, right? I think everything looks good. How does our overall analysis tab look like over here? Let's see what this looks like. So let's go hide simulations, single symbol, make sure we've got everything on there. Let's see the MES, portfolio beta weighted. Take all this garbage out on my T-bills. Okay. All right. Let's just kind of look where we are here. So, if we got a 12% down move, we're down $5,800, $23,000 if we go all the way down. Yeah, I think that looks fine. I think that looks good. I mean, that's just what the risk is, right? We would start getting out of stuff if we went down. So I actually did make changes in the trading plan. I just want you to see what it looks like. What we did is the change is I said to put debit spread closest to 60 days for the 50-point wide, closest to 45 days if we do the 300-point wide. Width is 50 points wide, 300-point wide is also acceptable. And everything else really just remained the same. I did put in here, sell a single put to collect $20 or two puts to collect roughly 10 to 12. It's also permissible to collect additional premium by selling two puts no higher than a 9 delta. So I did put in the delta in there. I also changed my management. My standard management is going to be around 28 days. Is when I'm going to look to manage those, right? And so we've got the trade entry. I did put this as optional hedging, right? Got the treasury bill ladder the same. Everything looks the same. And of course, we told you about the circuit breaker. If I get a daily drawdown of 5% or more of my net lick, it is permissible to close any or all trades until the market normalizes. Because, what we found out, and really most of this came from Ryan's back testing, but if we're going to survive something like the COVID crash, you got to have a circuit breaker. You got to go uncle. You got to cry uncle at some point and go, look, man, I need to get the heck out of Dodge. Let's see how our other account looks. And I got to take all that crap out. Hold on a second. Hold 6. This is the IRA. Let's get these out of here. See what the IRA looks like. It should be similar. All right. And 14,000 down on a 12% down move. That's kind of where we're managing risk, right? It'd be horrible if you got a 20% move, but we would be making adjustments in here some way. Because you sit here and you go, okay, we've got an $85,000 account. At some point, times if we were down 5% in a day, we'd be down $4,250. That's where I would go uncle, right? So somewhere between the 5% and the 12% down, I would cry uncle, say, look, you got to get out. And y'all, that's just preservation, right? That's just preservation going, hey, we can make the 4,000 back. We can do that. But we just don't want to be out of business. Okay. Because most times everything's good. So let's see how we're doing in this account compared to the S&P 500. We should be gaining on the S&P 500 a little bit. So we're at 4.5%. The market's at 7.03%. And you see this kind of is getting closer and closer, right? We're kind of now getting back to a position where we're kind of catching the S&P 500. And we are on track for a year of about 18% return. That's where we're looking at right now. But I think we're going to do better than that. But that's where we're right now. All right. Good session, y'all. It's just, these are boring times with our little strategy. We'll just collect data, rinse and repeat.
Hey, Bob. Good afternoon, everyone.
Hello, Ed.
Unless you need to go. Do you need to go right now?
No, I'm good, Ed. All I got to do is go clean the car out, the carriage out for you to get in. Other than that, Ed, we're good.
Thank you so much. Look, and I'm sure you've been over this a lot, but I've missed a few sessions in the last couple of weeks.
Yeah, we kind of noticed that, Ed. We kind of noticed that.
I've been mobile, I was on vacation. My wife fell. You remember all that business? So
yeah, and that's what I told Beth. Beth's like, don't let Ed anywhere near you. Because you broke your wife's arm. God, Ed, it's terrible.
Look, explain the 28-day thing versus like tasty metrics of 21. What was the reasoning there?
Oh, please? Yeah. Let's pull that up, okay? Let's go to.
Yeah, I just don't remember. Thank you.
Actually, where I've kind of come up with that was during the back test with option Omega. Let's see where I can find that. SPY best results. So this was selling one, and this was exiting trades at 28 days, right? And it had a great little, little profit thing. Now, watch what happens if you do a new back test. So this is opening on closest to 60 days and at 9 delta and exiting trade at 28 days. So let's take a snappy shot of this.
And while you're running that, may I jump in just?
Oh, absolutely, Victor. We'd love to hear from you.
Yeah, well, great. So I just wanted to actually comment on this because I think we are maybe not comparing apples to apples, because Tasty Trade runs this without spending any money on buying puts. They just look to cash in usually around 50% or at 21 days. And
Yes.
that makes sense. Now, once you pay $10 for your put debit spread and get out at around 50%, you're nowhere near making as much money as they do. So just based on that, I don't think that I think I prefer 21 days, because if you were able to run here the put debit spread, and I don't know if you are you? No, I think you're just running the.
Yeah, just the nakeds.
Yeah, if you were running the put debit spreads with this and spending money on them, I'm not sure if they will look the same.
Yeah, I see what you're saying. Let's just run this, and I just want to show y'all the difference here. This is just the nakeds running at 21 days to 28 days. Now, who knows? Yeah, I don't want to put too much into back testing. I really don't, but let's just see kind of what this comes out with. And the thing is this, y'all. Here's the thing. I get what you're saying, Victor. My thing is this. Regardless of what we're doing, the goal has got to be, I got to keep 0.1% over here, regardless of what I'm doing, everything else, right? So
that's actually another point I wanted to talk about once we either have more time, or maybe I can put it on paper and put it in a Discord later on, because I was thinking around this. And I agree that there is a minimum of 0.10, 0.1 theta that's required.
yes.
It should be the aim at all times. I think the aim should adjust with the VIX, because I know theta is theta, but actually once you look into it, if let me give you an example. Let's say you just one trade on, you put one trade on and you get $100 of theta, and the market turns against you, and that's your 0.1, right, on your portfolio.
Mhm.
It turns against you, your theta goes up to 200. Now you're at 0.2. But these extra $100 are your money, are not the money that you collected from the market to begin with. It's coming from your paper loss. So you're now going to adjust because you feel you have too much data and it's too much risk, and even though your other parameters are fine, bank and everything. So if you cut back that back down to 0.1 theta, you are actually no longer doing your minimum 1.1 theta, because your minimum 0.1 theta over the course of a year will give you your around 20%, assuming that's all pure money that's coming from the market and not from your losses, from your paper losses. And I'm not sure if I'm explaining that correctly, but I believe you get an idea. But I'll put it down on paper just to have it, like to be able to better explain it. But maybe anybody else can jump in and just clarify my point.
Sure, Victor. Sure, absolutely. And thanks for adding that. Now, y'all, this doesn't make sense. I mean, this is why I still want the guys from Option Omega to come to us. But look what happened. The only thing I did was change that from 28 days to 21 days. Look at the overall P&L on that was 176 in the hole. And that just doesn't seem right to me. Does it to you? From changing it, that's the only thing I changed. Exit trades at 28 days and then exit in at 21 days. Look at that max loser. Really, who knows if we're overfitting here or whatever. I don't know. Now, if I get down to 28 days and my theta is low, do I have to close them? No, I can let them go. It's just that I'm thinking that, under ordinary circumstances is probably.
So you're basically backing up a week to get a little further from the edge of the cliff, so to speak, as far as gamma goes.
Mm-hmm.
And because tasty metrics say get in at 45 and you're like closer to 60 without going over, you're really never getting into a 45 anyway.
Right.
You probably have that extra week or 2 weeks or more cooking on the other end.
Mm-hmm.
On the entry part that gives you the extra time. That part. The other thing, the back tests, I think they're great to look at. I'm definitely not minimizing them, and they do have value as far as giving you like throw a dart and hit a spot.
Yep.
But I don't know, I've fiddled with it a little in the last month or so. And, you can change the time of day, do the same exact strategy, but don't enter 15 minutes after the market opens, enter an hour and a half after the market opens. And it gives you a totally different result. So that, unless you're going to be like mechanical down to the minute, and I'm not sure their data, like, okay, I guess their data is accurate. I don't want to diss it, but I think it's a good thing to get a parameter, but not a hard expectation. But it is a good spot. Like if you ran tests for an hour or two, looking at all these little things, and you conclude, or longer, whatever the time frame is needed, and you conclude like this is what I think, and you start running a campaign like that, I don't see any harm in starting with what the test shows probably is going to give you a good result and tweaking from there, so to speak. The other thing is you might want to run this thing with some kind of stop on it, like instead of no stop, put some stop on it. But before we go there, I want to jump into what Victor said, which is when we're at 0.1 and our metrics are in line, and the market goes against us, we go to 0.2. First of all, usually my other metrics are stretched when I'm at 0.2 in those situations. So I'm not sure if Victor's are or not, or other people's, but I want to throw that out there. Usually it's not a point where everything isn't stretched. And then I understand exactly what Victor, or I think I do, is saying when we're at 0.1 and we go to 0.2, a lot of that theta is blow up theta. It's not our money. It's money we're down in the hole that we need to recoup as the market rallies. And to that point, that is what you're saying, Victor? Okay.
So yeah, that's correct. I just wanted to say that was an extreme going from 1 to 2.
Yeah, no, but
from 1 to 1.3.
Yeah. But it happens. Believe me, it happens. Okay. Right. It happened a month and a half ago. Mm-hmm. So I just want to mention that I know what you're talking about. And at that point, at the point where we've entered and we've gotten our thing up to 0.1 and everything's smooth and sailing and also sailing smoothly, and we hit stormy seas and our theta and our metrics shoot up, I think we're at a point where two things happen. Duh. Okay, either the market keeps going against us and we're about to be in a boatload of defensive measure, as we creep higher than the 0.2, or the market's going to stop freaking out and reverse. And if it reverses, all that theta can come pouring back within days or a week. Like you could go from 0.2, not do anything on your portfolio, and you might be at 0.09 if we get a decent rally and a vol collapse. So, and that's when all the lost money, not our profit money, comes back. And then we're in okay, we've made 0.01 of that 0.1 in theta, if you follow what I'm saying here, and I'm ballparking, but you know what I'm saying? Mm-hmm. We've recouped what we lost, and now we may be break even or up a little. That is where this whole thing becomes, we don't know what's going to happen. Like with me scheduling my trades and saying, I'm going to make this much if all goes well. Well, that's if all goes well. If it goes really well, that money will come in faster and I'll still be scheduling my trades. So I should eventually make what I'm planning. If it doesn't go well and it backs up like what Victor just said, going from 0.1 to 0.2, and it takes me 4 weeks to unwind the bulk of that theta, my expected return is not going to be what I projected because, as Victor implied at the beginning, the theta earned back in the last month is just the money I lost. I haven't made any actual quote profit unquote. My net lick is not higher than it was before the vol spike, if that makes sense. So I understand what you're saying, Victor, and I just want to say I do, and I'm repeating, when our metrics get squeezed, things are getting stretched, and either the rubber band's going to break and we're in trouble, or the rubber band's going to contract and there'll be a big sigh of relief, and the profits flood into the account with incredible speed and great enjoyment to us when we see that. So I did want to point that out, and just for whatever it's worth, I'll move on.
Yeah. And maybe I can just finish up on that, and I agree with you for pretty much everything you just said. My point was maybe if we're considering theta as it is a measure of risk, then maybe we just don't need to start pruning or cutting down just because theta is a little bit. We shouldn't really make a rush to cut down, and maybe we should allow for the market to fluctuate a little bit higher and then come back if other metrics are somewhere okay. But what I'm doing, because we're using spreadsheets and it's easy to change the formulas for myself, I changed my formula for my theta to just be a minimum of 0.1, but then also if it doesn't meet the minimum, it's VIX divided by 2 plus 4, and then I just leave it at that as my not just maximum, more as a target. So let's say it's 18, it's 9 plus 4, it's 13. So I'm shooting for 0.13 instead of 0.1. Or I could change that number to being plus 4, to being plus 3, to be more conservative or something. But it does allow me to not panic if it's still within those metrics. I can put on the trade, assuming everything else is. Say my metric score for 0.14 and I'm at 0.1 and all other metrics are still fine. I'm going to go ahead and put the trade on, as opposed to saying I only have 0.1 and I'm fine.
Right, right. And that's where we might have a little deviation, because I do it according to my schedule, but I totally respect you and doing it that way. Look, you're fine tuning it in a way you feel comfortable. Do you have your trading plan posted in your room?
No, but I might do that. But I just wanted to tell you that I added, after our conversation, I added another metric to that, which is from the tab where I put my trades on. I calculate by the week of the year how many trades I have in that week, and then that's transferred to my Greeks. Tells me how in the current week I currently have open and what's the maximum, and it turns to red. Let's say if I put in a net lick, if it calls for 2 trades per week, and I already put 2 trades, then it turns to red, and I'm not putting another trade even if other metrics are fine. But next week it's going to turn back to green by itself.
I like that.
Yeah,
I like it.
Yeah, and it's all automated, and I'm trying to now do everything automated with the data, with this, with Netlick, and maybe it's fine. I can, if it's okay, I can post the spreadsheet in my room if somebody wants to use it. Or
yeah, that'd be great.
I'd like to take a peek at it, just because I'm in my car, I'm listening to this. Otherwise, I'd be taking some notes on some of those formulas you just spit out. I'd kind of like to take a look at.
Absolutely.
Yep. And it's funny because a week ago, I'm like, well, I'm kind of thinking this, Victor, and you're thinking that, and maybe someday we'll kind of agree to be in a more common spot. And I really think you are you're merging the two, you're merging the discretionary with the discretionary according to metrics with the scheduling according to metrics. And I like it. I like it. Yes. So I'd like to see your spreadsheet, and maybe not your full blown trading plan, but just some of your thoughts, like you just said. Maybe some of those posts, just so, hopefully others want to look at it as well, but I'd like to take a look at it. So,
well, what I like is that, Victor, and I know a lot of y'all are doing this, you're making the plan your own. And that's what I really like, is that no 2 of us are trading the exact same thing. We're each putting our own little flavor into it, according to your risk tolerance, your profit preferences, and everyone's kind of embracing the plan and making their own little tweaks here and there. And I love everybody that shares those tweaks. And sometimes we pick up on something that seems like it's really good, like Victor proposing the 300 wide put debit spreads. I think that's great. And I'm sprinkling those in as well. So it's really good to see that people are taking the overall strategy and personalizing it to their own preferences. Very good. Anything else from anybody? Okay. If not, we will probably see everybody earlier in the morning. It may be like 9:30. So that way we can head toward Atlanta. Okay. So we'll probably have like a 9:30 session in the morning. And I hope to see everybody tomorrow.